Let's get straight into it. Bollinger Innovations, ticker symbol BINI, formerly Mullen Automotive, just closed the week at 42 cents per share, flat for the day. That might sound like stability, but make no mistake, this is still a stock hemorrhaging value. A fortnight ago, it flirted with a nearly $10 post-reverse split price, and now it's crawling back toward penny stock territory. Here's the brutal math. Despite the reverse split that was supposed to resuscitate its listing eligibility, the reality is the market cap hovers around just $2 million, well below the $35 million minimum Nasdaq requires to maintain its listing. That's not just financial trouble. That's existential risk. Now let's layer in the earnings news, the company's only meaningful corporate update this week. Posted on their newly minted website, Bollinger reported sales of just 3 vehicles in the past quarter. That's right, 3. Barely a blip. To make matters worse, the earnings announcement leaned heavily on deliveries made over the past 9 months, not just the quarter. So even the facade of performance is weak. Meanwhile, broader financial data shows that BINI continues to burn capital and pile up losses. Revenue levels barely register in millions, while the balance sheet shows red ink stretching into many tens of millions annually. But if you're thinking, okay, at least they're trying, consider how much of this story is actually transparent. Because one of the most alarming developments is the lack of SEC filings. Yes, they executed the reverse split, rebranded, and released earnings, but none of these moves were accompanied by the requisite 8K filings. No official switch to BINI, no documentation confirming the split, no formal earnings statement submitted under the new ticker. For shareholders, that's not just sloppy, it's suspicious. On the Nasdaq, serious corporate actions require proper EC filings. Skipping that step makes it look like a housekeeping illusion, not a strategic maneuver. What's the upshot? With August 26 just 7 trading days away, BINI is facing a delisting decision it's highly unlikely to pass. No filing, no market cap boost, minimal revenue, and a cash burn spiral. Yet they're hoping a name change and ticker swap will distract the exchange? Let's break down the risk. Reverse split, 14250 executed a couple of weeks ago. Branding change, rebranded as Bollinger Innovations. Earnings, just 3 vehicles reported, underwhelming. No SEC filings, no split confirmation, no filing on earnings, no updated share counts. Market cap, $2 million, nowhere near compliance. If you're still holding this, here's what's coming next, delisting. BINI will likely be forced off Nasdaq and onto the OTC markets, where liquidity dries up, spreads blow out, and retail brokers limit or block trading. Institutionals won't touch it. Once it's OTC, the company turns into a ghost stock. Here's something to chew on. There was a supplier lawsuit filed recently by a vendor in Wisconsin claiming the company hasn't paid $1.6 million for tools and support delivered in 2023. That's just the tip of the iceberg in liabilities. And guess where that wasn't disclosed? You guessed it, nowhere in official filings. Let me say this again, this is the pattern we've seen repeat. A reverse split to meet the share price threshold, check. A rebrand to Bollinger with a new tick symbol, check. A press announcement with some operational updates, check. No documentation in SEC filings, check. Continued stock slide, sinking market cap, and now a delisting countdown, check. If you're still long this stock, now is the time to think about whether you've got an exit plan in place. Are you okay holding a company trading OTC without access, without transparency, and without fundamentals? Because that's the reality BINI is steering toward. And while I'll say this lightly, there's only one trade that's made sense over the past months. Shorting, once a split jumps the price, because in this setup, the split doesn't fund growth, it creates a stale facade. You know it as soon as you see it. If we track the next steps, will BINI finally file an 8K confirming a change or split? That would be a lifeline, but it's late. Is there any major funding or revenue injection coming? Almost impossible to see at this point. Will they signal they plan to pursue Nasdaq small cap tier or file for some extension or grace period? That might save a few more weeks, but doesn't solve the core issues. To summarize, BINI is cratering from nearly $10 to just 42 cents. Its latest earnings reveal nothing to trust, communication is non-existent, liabilities are mounting, and the Nasdaq delisting clock is ticking. All dressed up in a new name, but wearing the same broken foundation. If you're still tuned in, watch Edgar over the next week. Track share count, if it jumps without announcement, there's new dilution. Monitor volume. If spreads blow, retail holders may panic out. Know your exit strategy, because this ride is about to end. BINI isn't the rebirth story it tried to sell. It's a death march by another name.